Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. What a day it has been for the equity markets. It was a day of extreme volatility, given the fact that we were oscillating between the day's low as well as the day's high. At one point, the Nifty did manage to dip in the red, but we did manage to come off pretty much and ended around that day's high of 21,350 or thereabouts. Volatility was pretty high today. The Nifty Bank Index, in fact, ended the day in the red. But otherwise, all the other sectors, ended the day in the green, led by the likes of IT stocks. They saw a sudden spurt in the second half of the session, which is why stocks like Wipro soared somewhere around 6% or thereabouts. If you look at the Realty pack, autos, metals, Pharma, all of them, are among the gainers, gained somewhere around 1 to 2% apiece, all these indices. Among the gainers on the Nifty, you had the likes of Wipro, HCL Tech, Hindalco, Hero Motor, Tata Motors, Maruti, Bajaj Auto. So all these auto names were doing well. But on the flip side, private banks didn't do all that well today. In fact, even SBI from the PSU banking pack, among the top laggards today. So the financials as a pocket, ended the day in the red, and most of the losers on the Nifty are from the financial pack, the likes of HDFC Bank, ICICI Bank and SBI, as I mentioned, Bajaj Finance, all these stocks in the red on an extremely choppy day as we head into the Christmas weekend. Mid and small caps, they were outperforming the benchmark indices. So the small cap index rallied by over 1% or thereabouts. And if you look at the market breadth, at one point in time in the morning, it was as strong as 5:1. But towards the end of the day, the advanced decline ratio dropped to 2.5:1. But extremely choppy session, and heading into the Christmas weekend, we got to see both the colors green and red, which are both Christmas colors on the screen. But to take stock of how things look for the next couple of weeks as we head into the new year, how things are panning out, and to discuss some of the stocks that were making headlines in today's session, let me bring on board Nirav Karkera, the head of research at Fisdom, joining in this afternoon. Great to have you on the show. Nirav, what do you make of the extreme volatility that we saw on the Lal Street today? Also, want to get in some sense on what really happened on Wednesday afternoon when we saw a sudden dip coming in, and it was so extreme that we ended the day lower by about 300 points on the Nifty that day. We have managed to cover some lost ground from there. But any thoughts on what really triggered that sudden fall, and how do things look like for the benchmarks going into the new year?
So Nandita, always a pleasure chatting with you. Now, there are 2-3 questions that have been mushed together. Let me take it one by one. Let's talk about the good thing that is today. It was indeed very volatile, but these are one of those days where you are bound to remember the adage that all's well that ends well. So the day ended relatively stable in the green. So today was a good day, and you really phrased it well. It was a Christmassy vibe. It was all red and green across the board, and just like spirits were high, even volatility was very high today, and we believe that this will sustain going ahead as well, because think of it from a very structural standpoint. Everything good that can happen at a broader basket level has been aggressively priced in, but this is also a reason for a lot of nervousness to seep in with any small bit of adverse news that comes in, right? So there were talks about especially around the Wednesday sell-off that happened. It was quite a rout back then, right? And many speculated it to do with the with the reporting of COVID cases. However, I don't believe it is completely on account of that. I feel it is important to dispel that right at the outset, because this thing is, if we start believing this narrative, it could snowball into larger speculations, because the news of the newer variant of COVID being reported was reported well in advance during the Tuesday, post the Tuesday session as well. So it was not captured in the early trading hours of Wednesday. So it was definitely not a knee-jerk impact to the COVID numbers that were reported there. In fact, I believe it has more to do with some very chunky profit booking that has happened across the board, especially between mid and small caps. And as we enter the holiday season, one can expect a lot more profit booking to happen, especially considering how many stocks especially in the small and mid cap segment have performed, especially during the calendar year, right? So we can attribute to one very huge bout of profit taking and basket buying, bulk selling. It could be an institution or a couple of institutions that did that, and it is for pure strategic purpose. But going ahead, we believe that volatility will be the norm in the very near term. We can expect the VIX to continue tracing higher and higher levels going ahead. So this is what I think about what happened on Wednesday. And in fact, going ahead, I believe that the benchmark indices will be able to hold up because the heavyweight on the indices are expected to hold up the index value in totality. However, at a stock level, the pain could persist. Volatility could be really heightened and elevated. This is not a time. In fact, it is never a time for speculation. But now is not a time to be very aggressive with at least leveraged bets and trading activities. At levels like these, you want to be a whole lot more in touch with the fundamentals and the principles with which you trade/invest.
Well, that's correct. But let's talk about some of the pockets, in the market that have been doing well. IT, for one. Last week there were a couple of days when we saw the Nifty IT index rally somewhere around 8% in a matter of 2 trading sessions, right? After that, we've seen some bit of profit taking as well. But today as well, around midday, IT was gaining, but the gains weren't as pronounced. But in the second half of the session, we saw the IT index take off, 2% kind of gains coming in today itself. And stocks like Wipro have rallied somewhere around 6 to 7%. But whenever I speak to some fundamental analysts, they point out that on ground, demand-wise, nothing really has changed for these IT stocks. And ever since, of course, the Fed hinted at rate cuts next year, we've seen IT stocks take off, right? So do you think the buying that's coming into some of these IT stocks is a little temporary, or it's a little premature for the kind of rally that we have seen in some of these IT stocks?
So, Nandita, you should place a few things in context when we look at IT, right? One is that definitely the news around the Fed rate hike, cessation, and the rate cut being on the table back again is a very important tailwind to the segment. At the same time, you look at the dollar index that has also been in favor of IT, and especially companies that are dependent on the forex translation like TCS and Wipro for that matter. We are expecting structural tailwinds to really support IT as a sector going ahead. The thing that you said about the demand situation not changing much on ground, I believe that is also true. But it is important to understand that IT stocks are trading at prices very, very off from their highs. They are trading at relatively lower levels. If you look at it from a very near-term lens, it will appear as though they have rallied a lot. But off their highs, we have seen quite a drawdown in IT stocks, right? So the value proposition in IT stocks for the price that they are in, they are looking good, especially in context of the growth that is expected. So though, what you said, and circling back to the demand situation today, which is, quite true that there is no direct or immediate change that we are seeing today. The markets discount the future, right? Looking well into the future, there is a very strong anticipation backed by very strong, fundamental rationale that the demand environment is going to pick up, from, a couple of quarters out from here. So since the markets, discount the future, we expect, a lot more interest to develop in IT at this point in time, because growth is expected to come in a few quarters from here on, and the valuations are looking pretty attractive, and especially in the large cap ITs. If you look at the recent trend, and you even take a slightly longer stance, you'll see mid cap ITs did really well, but large cap ITs were really bruised and battered through most of the year. So this is the time when the value proposition is seeming a whole lot more better. The valuation proposition is also seeming a whole lot better for large cap ITs, and so anything that you're seeing between TCS, Wipro, these are, and HCL, that has already happened, and which we will see in the days to come as well. We expect the upward momentum to continue, with intermittent volatility, but it will maintain a slightly secular upward trend in the quarters to come as more anticipation gets built into the prices.
Right, that was about IT. Of course, valuation attraction for large cap IT. Let's talk about the auto space. How would you play this particular sector now? Tata Motors, for one, I want to speak about this stock. This was among the top Nifty gainers today. The stock has gained 83% on a YTD basis, Nirav. And then some positive comments coming in from the management as well. It sees EV volumes, getting or growing somewhere around 30 to 40% in 2024 itself. And it has also lined up 3 new SUV launches in the coming year. But, if on the other hand, that was about Tata Motors and four-wheelers, right? On the other hand, two-wheelers have seen a good uptick, the likes of Hero MotoCorp, Bajaj Auto, phenomenal run, right? And experts are betting on some bit of recovery in rural demand and consumption both, right? So, should one play the auto pack via four-wheelers right now, or do you think two-wheelers is the way to go?
So the rural demand has been a long time coming, and we all have been waiting for a pickup in the rural demand. I'd say we are still waiting for that pickup, and this is a narrative that has been going around since the longest period. But I feel we are getting closer to this actually materializing into reality. So going forward, we expect two-wheeler sales to actually ramp up. We are seeing earnings being precipitated at a per capita level in the rural segment. We are seeing early signs of appetite for discretionary spending within the rural segment. There are very early shoots and signs. Of course, this is not the first time we are seeing such signs, but we believe this will finally culminate and make the rural reactivation a reality. So definitely two-wheelers looking good. And you spoke about four-wheelers incidentally, and even within the four-wheelers pack, you spoke very specifically about Tata Motors. So Tata Motors has been an out-and-out interesting story. This year has been quite the year for Tata Motors. Right from a strategic rejig to the shareholder value that it has delivered. There's so much that's happening, and I feel at this point, a 30 to 40% expansion in the uptake for EV within the auto market may seem slightly optimistic or slightly aggressive as a projection. However, we know that we are in a multi-year cycle where the adoption of EV is only going to grow. I am not sure if it's going to be 30 to 40% by 2024 itself, but I know for sure that this is expanding and expanding at a fast rate. And if anyone were to play this entire EV adoption story, Tata is a stock, or Tata Motors as a company is something you should not really miss out on, because it's not just because of their product lineup, but also the infrastructure access that they have along with their other group companies. So, EV adoption is not just a subject matter of the automobiles that you launch, but the charging infrastructure and all the ancillary infrastructure that you have to create around it to, increase the adoption rate. So I feel Tata Motors is still strongly positioned for this play. So talking about playing the auto pack, I say if anyone wants to play the auto pack, definitely Tata Motors is a good way to do it. You get a dual exposure to the EV play as well as to the auto play. I feel the two-wheeler uptake that we are expecting is more of a play on an uptick in rural demand and rural consumption more than an auto play at this point in time. So anyone believing that rural reactivation is finally becoming a reality, I feel two-wheeler is going to offer a very good value prop.
Right, as you rightly pointed out, we are still all of us waiting for that demand story, in rural India to really play out. But because analysts, of course, have been talking about that K-shaped recovery, right? So let's see how that rural story really pans out from here. But let's talk about the NBFC space in particular. After the RBI's crackdown on unsecured loans, now we saw RBI cracking down on lenders' exposure to AIFs as well, right? To stop or to curb evergreening of loans. Now we saw reactions coming in on stocks like IIFL Finance and Piramal Enterprises, and they've already declared their AIF exposure to assuage investor concerns. But here on, do you think this is going to have a significant impact on the earnings of some of these NBFCs going forward, or do you think because it's not a recurring issue, perhaps it will not have such a big impact? What are your thoughts?
So I feel RBI is doing the right thing. I feel it was a long time in the coming. In the short term, it could pain a lot many stakeholders in the ecosystem. But quoting a very famous quote, you sometimes need to let go of the good for the great, and this is one such time where all such moves are only going to make the environment much more conducive for more NBFCs to grow, flourish, and create a very healthy sector in itself, right? So NBFCs have been known as shadow banks for the longest time. I believe it is about time that it gets prominence in mainstream conversation and gets a larger podium on the main stage. So I feel these structural changes will help NBFCs as a sector get there. However, in the process, there will be short-term pain and there will be some collateral damage. And whatever we are seeing right now is an encapsulation of such short-term collateral damage. Will it have an impact on earnings? Yes, with almost a great sense of certainty, it will have an impact, and it will have a meaningful impact on earnings. And the impact will be more so seen in the upcoming quarter itself and the quarter after it. But the good thing is it's not going to be recurring. It is one big blow, and only to selective players. Depending on the exposure, I feel the ones with the larger exposures on their book are going to get the most hit. So it is going to be a painful era, but I feel this is the darkness before light moment for NBFCs and NBFC players. I feel you go through this patch and you ready yourself for the future. You future proof yourself even from on the regulatory front. I feel on the longer run, things are going to look pretty good and promising for NBFCs as a sector.
Right. We spoke about COVID cases going up, and that perhaps being a concern for the markets as well. But some of the pharma stocks have run up in anticipation of the cases going up, right? Because COVID did emerge as a silver lining for pharma and diagnostics, particularly if you remember. But Piramal Pharma particularly, this stock is up 9% today. I mean, hit a fresh 52-week high as well. And of course, it has to be with the positive commentary that has come in from the management in terms of revenue as well as margin growth going forward, right? But the company aims for 25% EBITDA margin for its CDMO business going forward in the long term. How are you viewing this particular company or stock in the pharma basket?
So, pharma as a basket has been neglected for the longest time, and there has been an overhang, due to multiple reasons. The largest ones being dependence on FDA approvals, etc., so on and so forth, right? But let's talk about pharma at a broader level, which also includes diagnostics, etc. You see, pharma as a broader sector also has been neglected since the longest time. Right now, and for very specific reasons, including the US FDA approvals and including the valuations, etc. I feel there is a growing appetite for pharma going ahead. There was a slight uptick around the time this COVID news was perpetuated a couple of days back, but I believe it was very minuscule, and it was a very low decibel impact that was seen of such a news. At the same time, let us zoom in further into Piramal Pharma. There's one very important thing that you spoke about. Even within the management commentary, you highlighted the 25% EBITDA margin that Piramal Pharma highlighted that it's targeting for its CDMO business. Now, the CDMO business is a strategically important business for Piramal Pharma. Okay, any such reassuring guidance, for that segment is expected to augur well for Piramal Pharma. And this is only one among the various strategic initiatives and strategic targets that the company is taking upon itself. And it is aspiring to fulfill all these targets in the very near term also. So these are not very long-term narratives or not very long-term, it's not a wish list. It is a target that the company is taking. And all such confidence and all such steps is being percolated and reflected in these stocks prices as well. So we believe that the uptick was, pretty good today. A 9% uptick is really good, but one should not look at it from such a narrow lens. It's not a one-time play. It is not a one-time buying that has happened into Piramal Pharma. There is a structural revamp undergoing here, and the outlook for the company, even at a fundamental level, looks pretty optimistic.
Right, that's the view on Pirimal Pharma. Of course, CDMO business, important guidance given by the management, and that of course the street has given a thumbs up. Another stock that has been in focus is Vun Beverages, Nirav, South African acquisition, and street has saluted that acquisition, so to say. And the stock itself has been a wealth creator, right? Since the time it has listed, it has given returns of 18 times already. So going forward, do you think this acquisition will mean higher EPS for this company? And is there much more phase left when it comes to Vun Beverages?
So Varun Beverages has been one of those Dalal Street darlings for the longest time, right? And it is in fact one of the most well-run companies that we have in the segment also, right? And stars have somewhat aligned in the very recent past for Varun Beverages. All things have been going in favor. Right from the sectoral tailwinds to the consumption uptake to the demand uptake to the way the company has been managing its finances, to this entire acquisition coming through in such a beautiful, sweet way. We are living in an era where most M&As are just hanging in the air and, creating a lot of drama in the air. But, this is one acquisition that sailed through really smoothly on a relative basis. So Bevco's acquisition was a very good play for Varun Beverages. It gives it access to South African markets, which is is a consumption mature market, right? So it has achieved a great deal of urbanization as a market, and this also gives it access to around 10 to 11 countries in the south, around the South African region. So it already had 50% of this, but now that only expands. So net, when with Varun Beverages capability and product mix and Bevco synergies coming in and access to such markets where the demand situation is so much in favor, it with almost a great deal of certainty, I could say it has to translate positively into the EPS. Of course, everything else remaining constant, we are optimistic that this acquisition and these synergies will translate into something that's EPS positive going ahead.
Right, couple of more stocks, Nirav, Allcargo, of course it has announced business restructuring, right? How does that bode for the stock going forward?
So, Allcargo did a very good thing by simplifying its structure. They have been working on it and they are at it since quite some time now. This is not the first time and they have worked in this direction. The restructuring is very good. They have simplified the structure further. They took the international shipping business separately. They took the domestic container and express business separately. And, the biggest thing that this will achieve is operating efficiencies and the synergies. And also, at a management level, it becomes a whole lot more easier, to manage and chase very niche segments that both these distinct businesses were supposed to chase with, great focus. So we believe that a lot of operating leverage will kick in their own particular businesses, and synergies will really help them at a group level. And the simplified holding structure will really help them with their financial aspirations. There were also talks about Allcargo raising around 500 odd crores. I feel this simplification will really help them raise these funds with relatively higher ease. You also look at any future expansionary, aspirations that they may have, even financially. That becomes all the more easier to avail, with such a simplified holding structure. Because think of it from a lender's perspective or a shareholder's perspective. This way, you have a whole lot more clarity on where is your money exactly going, right? So apart from all the efficiencies, I feel growth aspirations are also being taken care of in this process. So going ahead, the simplified structure is a net positive to all stakeholders, and it will benefit the shareholders. Again, everything else remains constant. We believe that the simplification of the corporate structure is very accretive to shareholders. And going ahead, we expect each businesses to try and gain market share in their respective domains, and as a benefit of and as an outcome of the simplification process that they have undertaken.
Right, lastly, Polycab, this is one stock which has, this one company rather one has, that has a very strong business fundamentals. That's what analysts have been pointing out, right? But of course, this IT raid news that has come as a setback. The stock was down 4% or thereabouts today. But this stock has also been a wealth creator, so to say. do you think that this has the probability of turning into something of a big negative for the stock?
Yeah, so anything of this sort is a contingent liability. Basically, it is a liability that has not been confirmed or denied as yet. So the outcome is yet to be seen, but definitely, anything negative in this development will continue to bear heavy on the stock because such things also are an indicator of lapses within governance at the heart of it, right? So this is, if in fact proven and this negative actually happens, I feel the Polycab could be under some pressure for quite some time, and they'll have to really work hard to win investor confidence back. However, right now everything that we're seeing is merely a reaction to news flow and nothing confirmed as yet. So there is always a probability that if this gets if the allegations or if the suspicions of allegations get disproved, the stock may bounce back, because fundamentally everything else is looking good, but everything looks good only as long as it is done with the right spirit and right intent. If the spirit and intent comes under question, then you question everything that was looking good, right?
Well, that's correct. As I leave you, I want to pose one last question to you. It's, which is that one pocket that you would advise investors to avoid, which you feel that, they have run up far ahead of their fundamentals, and going into new year, one should clearly avoid that pocket. Which one would that be?
So it is a tricky pocket to select, considering that we are witnessing a broad-based structural rally. However, I would advise some caution to be exercised, especially in the segments of realty. I feel at this point in time, because I don't want to play spoil sport. I feel it is one of the best performing sectors so far. But so as to say, it is important to understand that the rally here, although broad-based, it is important to look at stock level and company level fundamentals. And there's a lot of anticipation that has been aggressively priced in, and these are rather long gestation projects and cash accruals that are being priced in. So there's a fair amount of duration before most such launches and most such narratives actually percolate into the PNL. So I wouldn't say avoid, but be very cautious, be company specific, focus on fundamentals at a company level, before you start, before you decide to participate in any of these companies within the sector. It continues to be a good and promising sector, but just exercise some caution and do some fair diligence, like you should with any other stock also.
Well, that's right. Well, Nirav, Karkera, with that, thanks a lot for, joining us this afternoon and sharing your thoughts with us. Wishing you a Merry Christmas and a very Happy New Year. And, look forward to having a longer conversation sometime soon. Well, with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. And, of course, to all our viewers, a very Merry Christmas. Have a great weekend. It's a long one. And, come back and join us on Tuesday morning when we come back with the markets. But till then, you stay tuned to Moneycontrol for all your other news and updates.